From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Good afternoon. On this Tuesday afternoon, this is the COB, all the stuff you need to know in the world of business and markets for another day. My name's Kyle Rodder, of course, here with Danny Akuye. And Danny, it's pretty quiet out there.
It's very quiet. Volumes are really, really low. I was reading an article saying we are back at January turnover levels. So
Wow.
I feel sorry for salespeople, having been an institutional salesperson, and we had the Asian currency crisis and we lost our markets.
Yeah.
So literally I still have nightmares about that because you couldn't generate any sales when everybody had left the country.
Yeah, so what is this, world's smallest violin? Is that what we call that one?
Yeah, teeny tiny one.
All right, well, it is a little bit quiet out there, but let's have a look at where the CBO 200 closed for the day, if we may. And, flat. There was a little bit of pocket, a little sort of air pocket that we hit around 130. In fact, I was just keeping an eye on Twitter. Nikkei was off by about 1%. The ASX 200 fell slightly. Didn't seem to be on any news whatsoever, or at least anything that I could find. But nevertheless, maybe just another example of those sort of thinner markets that can sometimes run into situations where a little gap intraday is not uncommon. Let's get to the three themes though, again, because we wouldn't want to labour the point here on a day that was pretty quiet, relatively speaking. And there is a bit of a tech revival going on. You'd be happy to know, of course, WiseTech rallying. I'm happy that Xero is back above 110.
Yeah, and obviously Technology One had really good results.
Yep.
But WiseTech, I think, is at an all-time high. Yeah, it's amazing. So, I mean, obviously they haven't reported, but last time they did have a report, it was better than expected. But clearly, maybe it's catching some love from what we're seeing with big tech in America.
Yeah, it seems to be that thematic play, doesn't it?
Yeah.
There's some momentum behind that now. Can't go another day, of course, without talking about the debt ceiling. And, you're getting some overall, we were talking about it, if you look at the essence of the communications here, it seems to be really reasonably positive from both sides, reassurances that a default won't occur, but of course we're getting closer and closer to the so-called X date there. So naturally there's some jitters around the event.
Yeah, jitters around, but I think, hedge funds or all funds are hedged up to the nines on this event. So that's why probably volumes are really low. I did see McCarthy and Biden chatting in their news conference. It was quite interesting. The journalists all went wild when they stopped talking. It was all this chirping going on.
Yeah, right.
But, the fact that they came out and they presented a brave face, you can see why Biden had to get back, because the more left side of his party really grabbed control over the weekend and said, no, we're not making any concessions, and the talks, were being dashed on the rocks. I mean, Biden's been around a long time. He's done a lot of negotiations. So, I guess it really depends how much down to the wire it goes and whether or not it precipitates one of those debt downgradings that caused all the ructions in 2011.
Yeah, I suppose he does have those contacts on the Hill. I guess that was his big selling point as a presidential candidate. And we'll see if that happens to serve him, and I guess by extension, all of us well. And just finally, still growing, still going, the Australian economy, some data out today. Again, continuing to point to, an economy that is expanding, even in the face of course, increasing fears about a slowdown. And, we had some consumer confidence data out today, as is tradition in the markets currently. That's fairly weak, pessimists galore. But we'll get across some of the sectors now. The banks were actually quite positive for the session. Broad-based gains there, and Commonwealth Bank knocking on the door of $100 per share once again.
Yeah, Pacific Western had some good news out last night. They were selling off a chunk of their property loan book, which I think underpinned a bit of a rally in the US banking share prices. But yeah, you're right. Commonwealth Bank can't keep it down for too long.
Wouldn't seem so. We'll have a look at the tech space specifically now, and just some of the stocks that we were just talking about earlier. So there you go, WiseTech. We just mentioned that, up 0.9% and above $73 a share, all-time highs. We don't have streamers, but if we did, I'm sure we would have deployed them. Xero also back above $110 a share, and that's a pretty remarkable move considering that less than a week ago it was at about $90.
Yes,
so
absolutely.
Plenty of follow through there. Even Block is catching some love. Retailers, in fact, consumer stocks was where a lot of the weakness happened to be.
Yep.
Discretionary and Staples, both at the bottom of the market map today. And I guess you can see some of those names reflecting that as well.
I think Foot Locker had an absolute shocker in the US. So,
Yeah.
you know, again, the markets continue to be very, very bifurcated between those companies that can generate earnings through a slowdown and those that are being hit by, you know, really a consumer that doesn't have as much purchasing power.
No, they can't buy their Air Jordans, I suppose. So moving on, which takes us to some of the corporate news today. I feel like we've covered off a little bit of it. Those Technology One results, reasonably solid. Is that one you follow much? I don't really have it on my radar typically.
No, they look like, you know, good results. Apparently the dividend only up 10%, given the extent of the earnings growth was a little bit more subdued, but maybe they're keeping some firepower back to invest, you know, for the future, but really saying that they are going to be resilient through a, you know, macroeconomic headwinds. It is a favourite for a lot of investors. It's been really solid. I mean, it hasn't looked back, and it's through $15 now.
Yeah, and well, in terms of the small cap space today, actually, we spoke to Skander Malcolm from OFX. It delivered results today, and I don't know if you know this about me. My actual career started in foreign exchange payments, the humble world of foreign exchange payments and hedging. So OFX was a competitor of the companies that I used to work for, but used to have sort of, I guess, a bit of the inside pulse on how those businesses worked. And its shares were up, we'll probably see a little bit later on, about 20% today. A lot of hedging activity from corporates just to try and manage a lot of that risk in the currency market, because it was dead during the ZERP years. But, well, interest rate moves, currency moves, and that's good for companies like that. Last but not least, Silk Laser.
Yeah.
Another bidder coming in for a business that, well, I mean, I guess people use that stuff. I don't know.
Don't look at me.
No.
I'm not in that market, but it is a very big market, and clearly Wesfarmers, I thought it was quite strategic for them to put onto their pharmaceutical acquisition. So, I would imagine there was a few cursing, you know, swear words going on, like what is happening? Because this is a small company that's bid for them.
Yeah, right.
So I don't think Wesfarmers will be speaking to Deutsche Bank anytime soon, because I think they put the deal together.
Oh, there you go, burning bridges. But anyway, stock of the day. It was Technology One, and we had a couple of familiar faces talking through it. Rudy Philippek Van Dyke from FN Arena, and of course Henry Jennings from Marcus Today.
Oh, that's why it grows more consistently at 20%, but I guess it's up there. If anyone is interested, yes, I'm a shareholder, have been for a very long time. We've talked about this stock for so many times. Best thing I can say is buy them when they're temporarily out of favor and just hold.
It's very much a strong hold here. If you've got it, you wouldn't sell it. If you haven't got it, you just need an opportunity to try and get set, or as Rudy rightly says, nibble away. So maybe if it drops back towards sort of 15, 14, 50, 15 bucks, that is your chance to start.
There you go, a solid hold there from both gentlemen.
I thought it was a strong hold or a solid hold, as you say.
Yeah, exactly, an emphatic hold. And you know, you talk about opportunities. I think a few investors may have had one a couple of weeks ago when they had that cybersecurity issue.
It didn't really dip that much.
Not enough?
No, it went under $15. Blink and you miss it.
Oh, really? You've got to be quick these days, don't you? Okay, well, let's push on and get to our guest for the afternoon. We welcome to the COB, Martin Crabb from Shaw & Partners. Martin, great to have your company.
Good to be here.
It's, I don't know, it's tough to kind of find a big talking point from the day's trade, because it is, well, relatively quiet out there at the moment.
Oh, it's dead. Like the old sailing ships used to come around the Cape of Good Hope and then hit the doldrums. There is no wind. And so you just sit there listlessly waiting for something to happen. That's what the market was like today. That chart you had up before of the SIBO, I think it was a 4-point trading range all day. So we're all watching the screens to see if there's any movement in the mini futures in the US, just to see if there's something going to come out.
Some life.
Yeah, and because you kind of watch that, and if that starts to move, you know there's something happening. Because obviously what I think the negotiation over the debt ceiling will probably get resolved in our time zone, so it'll be interesting from a market perspective. So everyone's watching that. And of course, nothing new to report. As you said, lots of smiles, but no real progress. And so we're just sitting for waiting for something to happen. So volumes are way down. Yeah, it's pretty tough out there on the sales desks.
What about Jamie Dimon making those comments overnight that beware shareholders, interest rates have the potential to go a lot higher. He even, said 6, maybe 7%. Is this just Dimon jawboning, trying to, put everybody back in their boxes? Or do you think that he feels there's a genuine risk that sticky inflation is there and the Fed might have to keep going?
I was at a conference where Jamie Dimon spoke in 2018. And he was talking about interest rates going to 5 or 6% then. They went to 0 and stayed there for 3 years. And so look, he's just a student of history, and he looks at long-term inflation targetings too. And you put in a bit of a risk premium, for inflation, and you're starting getting up to 4 or 5% bond yields. And when the central banks are tightening, they need positive real interest rates. And so you need to get up 5, 6, 7. To get on top of inflation. So that's kind of his reading of history. And also he's running the biggest, most conservative bank in America that is, if there is such a thing as a beneficiary of everyone else going to hell in a handbasket, then that's them. Like they'll be bailing out banks at the bottom of the cycle as they normally do. So there's an element of that kind of tongue-in-cheek stuff. But I mean, I think it's prudent what he's saying. Like if you're stepping into the housing market and you want to take out a loan, think about rates going another 2% higher than here, and if you can stand that, then our regulator forces the banks to do that assessment anyway. Maybe he's just saying that to people in the States, is don't get carried away. We're not at the end of the hiking cycle yet, and we could go higher, and we don't know how far we need to go to stop this dragon, but you need to be prepared for the worst, and I think that's prudent for him to say that.
Well, let's get a look at the futures now. First, starting with Aussie interest rate futures, because almost the diametrical opposite of what Dimon's saying here, which is cuts potentially by the back end of this year. And of course, we'll get some more colouring from the US perspective as well, because we have FOMC minutes this week.
Yeah. So the market is moving away from cuts in Australia. So it's relatively flat. There's about 30 basis points in between the Sep 23 futures and the June 24 futures. So there's one and a bit. So after the probability of a hike sometime in the next couple of months, as we get as we get the minimum wage decision coming out, as we get another lot of CPI in the next couple of weeks, the market's saying, okay, maybe the RBA goes up, maybe it doesn't. But this kind of whole narrative of goes up and then it comes straight back down again, which is what the market was pricing in, a few weeks ago, and certainly back in March it was pricing that. It was pricing in cuts like now. We've moved away from that. Now everyone's just saying higher for longer. So we're going to get to 385 to 4. So the next move is 4.1, you can see on the chart. So somewhere between 385 and 4.1, and we'll stay there all this year. And then maybe into next year, things start to come down again. We're still of the view there's another 25 points in this, probably in July. But also that's probably over tightening, and they'll have to cut aggressively, maybe 1% next year. That's kind of how we're seeing it at the moment.
It kind of seems to be the theme, doesn't it? It's like if it is proving to be stickier inflation and they have to go harder, well, the harder they go up, then the harder everything eventually will come crumbling down. I mean, we've talked many a time about how some segments of the community are just not even blinking. No debt, they're loving the fact that interest rates going up. So maybe it takes some breakage of asset prices to pull their heads in. I don't know how you're seeing the dynamics, Martin.
Yeah, I think it's more cash flow, Danny. I think it's like everyone's employed, everyone's got a job. There's a little bit of wage rise coming through. There's still all the money in bank accounts from the COVID relief. It's still $3 trillion excess savings in America, even though they're spending like crazy. So there's still a lot of cash out there. So I think it's more about you need to change the cash flow for families. So you need one of them to lose their job, and then behaviour changes. I think asset prices just don't turn the dial. So anyone who owns a house in Sydney has probably seen it fall 15% in value if you look at the Core Logic Index. So has that stopped anyone? Certainly Saturday night in Sydney you couldn't get a table at a restaurant. A few of my colleagues were out last night. Monday's normally a dead night. The restaurant they were at was packed on a Monday night. So there's still lots of cash being splashed around, Danny. So I think what's going to change that is not asset price deflation, it's cash flow. We don't need, no one needs unemployment, but to change that narrative and change that behaviour, people start to have to be worried about their job, and that's when they change their behaviour.
Let's get to the PMI survey that we did get today, because it doesn't typically move markets, but we are speaking a lot about persistent services, strength in services activity.
Yeah.
We'll see if we can get that chart up now by any chance, just on the screen, so we can speak to it. This is manufacturing in particular in contraction.
Yeah.
Even speak to this, and also obviously as well, just perhaps some of that resilience that you kind of touched on there when it comes to the services sector.
Yeah, so Australia is almost non-existent manufacturing sector, right? There's not a lot out there.
Right.
But what is there, participate in this CommBank survey, and it's 48 for the month of April. So it's down, not only down below 100, importantly, directionally it's lower. So we've been contracting from pretty strong levels for over 12 months now, and that's a relatively long contraction as far as these things go, but no sign of that changing at all. I think manufacturing is just getting tougher and tougher. As you said though, the key to the Australian economy and most other developed economies is not this sector, it's services. So services like us going out to grab a beer after work, or going to a restaurant or the theatre, or going to watch Collingwood win yet another AFL game, that comes up in the services sector. So that doesn't show here. So we'll probably get services. I think Judo Bank now does the services index. I think they'll probably put that out tomorrow.
Ours today, I think it was.
Was it today? Yeah. So I didn't look at that, but certainly manufacturing activity and earnings revisions do go hand in hand. So this is a better indicator to look at in terms of the direction of the market, because services doesn't get revised that much, but this is suggesting that the delta for earnings growth in Australia is negative. So we'll start to see earnings downgrades.
But travel, I mean, people just still can't get enough of it, can they?
Enough.
I mean,
Can't get enough.
Qantas is not shy in coming forward with charging like a wounded bull.
Yeah.
And well, it's true.
Yeah,
I mean,
so I go down every 2 weeks. It's like killing me.
You
spent
get
$8,000 on airfares
you
last
get
year.
pinged if you change your flights, but yet everyone just. I mean, I was down at a certain affluent suburb, and they said it's getting quieter. Everyone's going to Europe.
There's a lot of
so
that.
I mean, like
I'll let you two speak about that one.
Yeah,
I'm
like
not
at
part of that crowd.
what point? Again, maybe it is that case of unemployment has to rise, and maybe people eventually have enough of this travel frenzy.
Yeah, well, it's difficult to separate the structural from the cyclical with this stuff, isn't it, Danny? Because it's a bit like office vacancy levels. What's normal in a post-COVID world? So a lot of people who Aussies love travelling, like 20 million in it, 30 million in and out every year in a country that's got 25 million people in it, right? So in and out all the time. And we couldn't do that as that chart. We couldn't do it for 2 or 3 years. So
Still recovering.
Part of us have got this revenge travel thing. So this is Sydney Airport's 12-month rolling 12-month travel numbers. And Qantas talked to this today as well. Their forward bookings are 23% above where they were pre-COVID. Wow. So their bookings are suggesting that we go above 30 million domestic trips and above 20 million international trips at Sydney Airport, so let alone all the other airports put together. So we're still 2/3 of where we were pre-COVID on an annualised basis in Sydney. So yeah, if you take the Qantas experience, then that's why this sector is red hot. Like we're like Hello World. It's had a huge run. There's something it's tripled Flight Centre, which is still one of the most shorted stocks in the market. Those shorts must be really feeling the pain. Webjet report their results tomorrow, so that'll be really interesting. But this sector is red hot. I think it feels crowded because everyone else is looking at the same charts we're looking at and going, they're already there. And you kind of feel like if you're going in now, you might be the last person on the. Remember the aeroplane game? Remember that? You might be the last person in the aeroplane game, but the sector is definitely red hot, and it doesn't look like slowing down.
Yeah. Wow.
Yeah, well, it's an interesting dynamic, and hopefully we, the three of us, are a part of that. Was it 30 million, or whatever it's going to be over the next 12 months? That's right. I wouldn't mind getting out a little bit, but I'll let you get out fairly soon, Martin Crab. Thank you so much for your time, Martin Crab.
Thank you,
there from
Thanks,
Xero Partners.
Kyle, Danny.
Okie dokie. Let's.
What is on overnight? More debt ceiling?
Yeah. Let's. Okay. Well, we're going straight to what's on it overnight. It would seem, and more debt ceiling. We'll get more of the noise from Washington. But we finish off with some global PMI data. So probably be a bit more interested in the US and European situation, US in particular, because clearly it's been expressed by Jay Powell and the team that they're really targeting that area of the economy to try and take some heat out of it, to say the least. A few other interesting points there as well. But before tomorrow, we'll have a fairly big event in our corner of the globe with the RBNZ decision, expected to go 25 basis points again.
Wow, they are really copping it over there, aren't they?
Yeah, it seems to be a little bit of a juxtaposition across the Tasman there of two ways to try and handle monetary policy, which is one is the whole sort of kind of level it and build it back up approach
Yeah.
potentially.
Well, I guess
versus
if you wanted
ours,
to buy,
which-
New Zealand property,
Yeah.
maybe you'll have an opportunity.
Yeah, I sure hadn't thought about it. Do they do 100% mortgages, 105% maybe? back in the day, apparently. Anyway, there you go. Let's get to the leaders and laggards, shall we? Starting with the leaders, and well, we've already covered off a few of them, but here we are.
Block.
There you go. It's a punter's market when you've got Block rising 4.5% on no news. But Paladin, try to find some stuff on nuclear. Someone's going to slap me down. The only time anyone's ever reached out to me publicly is when I stuffed up the pronunciation of nuclear on Joey. So I've got to be really careful. But nevertheless, there we go. Paladin doing fairly well today. New Hope Tab
Does bounce around a lot though, doesn't Paladin? It's very much be your trading
you
stock.
know it's like Twitter, uranium Twitter, right? They're
I've never been onto uranium Twitter. I'll have to seek it out.
Go seek it out. Go have fun with that. It's they're good people, but they're a passionate bunch, and especially when it comes to obviously the case for nuclear energy. Telix as well, up another 3%.
Yep,
One-way traffic for that thing.
The AGM, I think, is later on this week. And Tabcorp, I think it was Morgan Stanley or Macquarie that upgraded that one. They've got their Victorian contract coming up and said that really it would be very earnings accretive should they get it reaffirmed in the middle of the year. But if they don't, they will just transfer to digital. So it would be net neutral. But they did upgrade it to a buy.
There you go for Tabcorp. Let's get to the laggards now, and across the screen, BrainChip Holdings. That's
BrainChip goes up, BrainChip goes down.
Yeah, exactly. It's sort of
it's a very astute comment, isn't it?
Well, yeah, that's the thing though. For something that's called BrainChip, it exhibits very little rationality when it comes to its share price. But it was up by 10% yesterday, down 18% today. A bit of gold there on your screen. As you can see, West African Resources, a higher beta play on the gold space, I guess you could say, down 4.4%. Elders in the wars.
Elders is in the wars, isn't it? One would start to say at some point it must become, some value must emerge at some stage.
Well, it kind of looked, I'm a simple kind of guy, as we're all aware, and I just sort of look at the charts, and it has that kind of like, reeking of capitulation, you know what I mean, where just the final sellers have just given out. It dropped huge amounts last week. Really looks quite oversold. Yeah, and you could even see it today when it slips below $7. There was a few. In the crypto community, they call them paper hands.
Oh, okay.
Yeah, you either have diamond hands or paper hands. So paper hands, if you don't hold it very strong, and you sell it. Whoop, paper hands. Yeah. So anyway, there you go. And Sonic Healthcare, Perseus. Here we go. This is the best part. Small caps. Let's see what's on the screen there. Anyone we know? OFX. We've already spoken about that one.
Good
right
results.
In my wheelhouse is again sales dealer at a currency joint, but Zipco actually bouncing back.
Can only think that those regulations that the government's bringing in is really too much of a light touch. You're seeing some of those companies rallying, and obviously Silk, they got a higher offer, much to the chagrin of what's his name? Rob for Wesfarmers, the CEO. I've just forgotten it.
Yeah, me too.
Rob Scott, is it?
Rob Scott. Yeah, there you go. We got 3 out of 5 today. We should get a prize for that on Small Cap Bingo. And let's go to the laggards now. Serco. You spoke to Serco. Was it Serco you spoke to last week?
Yep. No, they had, they've obviously been sold down a huge amount because of COVID and the lockdowns and rising interest rates. They had good results. They rallied quite hard. So clearly some shareholders that have maybe been in there for a while deciding to take some profits on that one. AB Jennings, you don't see that very often, do you? The home builder.
Yeah, down 6%.
39 cents. Oh, I remember when that was a big company.
Oh, wow.
Long time.
We'll eulogise that one off air, perhaps. I like the Dreadnought as well because it sounds like a metal band. Anyway, that's the small caps for you. And, Danny, that pretty much wraps us up. A bit of a quiet day. We sort of, again, wait for a breakthrough perhaps on the debt ceiling talks, but for the time being, we tread water.
Absolutely.
Okay.
Exactly.
Well, if you want to catch up, there was some really good interviews and views given throughout the day. It'll be on your website and app. You can catch up on those tonight. Otherwise, we'll see you tomorrow morning.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.